Welcome to Picture Perspective, where we unwrap all things business, investments, and markets. My name's Jordan Kennedy. Let's get going. Before we start, this is general advice in nature. Should you wish to seek personal advice, please reach out to your advisor. It's my pleasure to introduce Cameron Kirko, our Chief Investment Officer, to dive into all things markets. Let's go, Cameron.
Thanks, Jordan. Great to be here.
Let's talk about the economy. The RBA seems to be a bit concerned. What's going on?
Yeah, so with respect to the RBA, their big fear at the moment is inflation's been coming a bit hotter than they were expecting, and they've attributed that to a mix of stronger than expected consumer demand as well as business spending. And what we saw subsequent to the actual decision was an admission that the government is effectively running things a bit hotter than they expected as well. And so all those factors contributed to them seeing inflation at a higher level, and they decided to act by hiking rates.
So these things like NDIS spending, government spending, are they distorting the traditional data that the RBA is looking at?
To be honest with you, the answer is yes. And if you look at what's happened to our jobs market, we're at a level that's actually unprecedented in a sense. Like, we haven't been this tight as a jobs market on a sustained basis. We're talking multiple decades. Healthcare is nearly 20% of the workforce now, and that's really having ramifications for wage growth and the like, and also just how tight the economy is running at the moment. And the RBA is choosing to act by putting pressure on anyone that can borrow.
And there's talk of further rate increases throughout the rest of the year. What are your thoughts on that?
With that, I think the RBA is going to be a bit more conservative. If you look at the outlook for rates that they put out with their forecast, it was really only talking about one, potentially two hikes, but really only one more by the end of the year. And I think even with that, it's going to be very dependent on what data comes out. So if inflation comes out a bit below their forecast, which there is actually a reasonable chance of it because their forecasts are well ahead of consensus levels, then we might just see what we saw the last several months, where the RBA just stays on hold for a prolonged period again.
And weaving into it, currencies, obviously we've seen rapid movements in sort of global currencies. Is that having an effect on the RBA's decision, and what are causing these wild movements in the currency rates?
Yeah, so currencies it's a complicated area because it's not just what's happening here, but it's also happening in the other country who we're considering. So to take the US, for example, there's a real fear amongst investors that with President Trump's new Fed chair, the US is going to run the economy hot, and that means materially lower rates. And in that case, well, you don't want to be holding US dollars. And that's a really big driver of the rally we've seen in the Australian dollar. The other factor has been a speculative surge in certain commodities as well. And those two factors have really driven the Aussie materially high. So it's probably a better time than last few years to go visit the States. But those are some of the factors that are driving it.
You touched on commodity prices. Every time I walk through Martin Place, there seems to be an exceptionally long queue of people lined up still to, last Friday, looking to buy gold. Why?
Yeah, so gold, again, so we're talking about what's happening in the US. In the case of gold, the prospect of the US running the economy hot and really lowering interest rates has made gold effectively a Trump put option, which investors are flooding towards. And we've seen a bit of spillover as well. So silver, for example, has skyrocketed by an even greater magnitude. The other factor that we're seeing is a real surge in retail investor involvement. So you've seen retail ETFs that hold gold or silver really see material inflows. And the third dynamic is, and people don't talk about this as much because it's a bit opaque, but you're seeing some big China, what we would call whale investors, make some material bets on both gold and silver. And that's another factor that can really drive these metal prices up in the short term. And To take silver, for example, it's a much smaller metal in terms of overall value than gold. And so it doesn't take anywhere near as much money to really drive it higher. And the last thing to note, with all of these things, they're not like a bond or holding a share in, say, Woolworths, for example. In those cases, you've got some fundamental basis for why this thing has the value it does. With these, enough people put in money towards a commodity, the price goes up. And how much or how low it can go, we don't really know. And we've seen that the last couple of weeks where, overnight the silver price crashed nearly 30%.
Yeah, big movements. Talking about things with intrinsic value, let's touch on crypto. We're seeing it move to 5-year lows recently. What's going on there?
So a few factors, I think it's safe to say. One is you had a material source of buying from what were called digital asset treasury companies, and we've really seen that trade unwind. There's some speculation that they're going to no longer be included in equity market indices, so that's one source of demand for these stocks. The other factor is with crypto prices going down, some of these companies might potentially have to sell crypto in order to pay off their debt. So Strategy is probably the biggest example of that, which was a notorious bull on the way up, and now on the way down when they've issued all this debt might actually cause something of a short-term doom loop for crypto prices. The other factor, gold and silver are hot. And so we've really seen a change in the retail investor landscape where it's almost like a daisy chain effect where people jump from sort of one hot space to the next. Whether it's entertainment, a new way to make money, just the gamification of trading. And I think
access, right?
It's more accessible than ever before with the likes of Robinhood, and we've seen pockets of it here in Australia as well. And you put all those factors together, if something's going down by a lot, well, why wouldn't you go to the next hot thing?
The momentum trades. Lastly, let's talk through specific stocks. Tech stocks, AI stocks, seen huge amounts of volatility over the last quarter. What's your read?
Look, I think with that, what you've seen happen is a whole suite of new AI tools have been launched, and that's causing people to change their expectations for the future. So whereas before they might think, this AI stuff's neat, it's cool, but it's more a sort of 3 to 5 year challenge for some of these tech stocks. Now people are having to revise those expectations and say, geez, the marginal cost to produce a new piece of software, that's going to be zero before I know it. And in which case, like, how valuable are some of these stocks, software names really? And that's where we've seen frankly, a case of baby being thrown out with the bathwater, where it's basically assumed the way these stocks are being priced that there is going to be no moat for a lot of them. It's going to be easy for someone in their garage to just come up with alternative to Salesforce overnight. Now, what that's caused is a massive sell-off in the space. That's also spread even to online classifieds and like, which we would consider as a lot more moat-worthy, so to speak, because quite frankly, so to take REA, for example, that plays a really important part in bringing together both buyers and sellers of real estate. And it's quite a complicated process, as anyone that's gone through it can attest to. I think it's going to be very hard for that to just be supplanted by a new source of coding, because you have to go through the whole journey in terms of getting all the supply onto the platform as well. So we think there's going to be some material pockets of value that are uncovered in this piece. But conversely, there are some of these names that are going to be value traps that, quote unquote, vibe coding is really going to disrupt these businesses. And so it's just going to take time for the markets to settle. And the ultimate proof in the pudding is going to be what these companies report. If they're still showing traction, there's viable demand from consumers and businesses for their products, those are the ones that are going to stand the test of time.
And you touched on this, but reporting season ahead of us, any concerns or things that we should be wary of leading into this period?
I think one factor is really just going to be how some of these growth names that are really downtrodden report. We saw sort of a mixed report from REA recently, and we've got a few more in the pipeline. So it's going to be really interesting to see what kind of traction they're seeing. And frankly, I'm not expecting a lot of disruption. I think what we're seeing in overseas markets is a bit premature. The second thing, maybe not so much a worry, but a point of interest, is really just how big is the cash pile going to be from the commodities space? Like, what are these companies seeing? We've had a big rally in spot prices across most key commodities in the ASX, and it's just going to be really interesting to see what some companies do. More recently, Rio's walked away from the Glencore merger, which was potentially a huge deal. And I think M&A is going to be an interesting point. While these prices are lofty, the temptation is going to be there. It's just going to be really interesting to see how much discipline ASX CEOs have.
Thanks, Cameron. Some really interesting insights as always. For those at home, thanks for tuning in. If there's anything that you would like us to cover in future episodes, please reach out. Look forward to seeing you again soon. Bye for now.